Hi, I'm Michael Owen and I'm thrilled to join Weeks as their global brand ambassador. In football, success comes from precision, speed and strategy. Every move matters. With 1,000 plus trading pairs, you can trade spot, futures and more. And security? Weeks leads the way with Plus, a 1,000 Bitcoin protection fund. Join me on Weeks, where new wealth is made.
Ladies and gentlemen, it's Adrian Zunchik, CMT Charter Market Technician, Crypto Burp, and this is the third day, the day 3 of our trading congress, designed to help you get you back on the feet, basically after absolute carnage of the market that you've encountered with crypto and with quite a couple of other asset classes, interestingly. And we bring the top world-class leaders, portfolio managers, people with absolute incredible amount of experience in this, skin in the game, if you will. People who have been through a lot. People who are incredible founders, business leaders, thought leaders, such as also our today's guest. And well, all of that help you basically just make you a little bit better in terms of your trading knowledge, how you can apply it, because it's been very difficult and it doesn't seem it's gonna make it any easier in the coming months. So for a very good reason, welcome to this edition of Trading Congress. This is the 7th edition. And for everybody who's new, this year Trading Congress is sponsored and partnered up with our friends from EdgeX and WeExchange, who made this entire edition free for everybody. So shout out to EdgeX and to Weeks. Incredible people. I know them privately as well. Very, very smart folks up there. And I wish I could say that about everybody in the crypto space, but these people are genuine. So without further ado, I want to welcome our today's guest, Julius de Campenauer. With Julius, I always have this much pleasure of getting reunited, because this guy is an absolute gold mine of wisdom. For he's been really here for a long time. He's always very cheerful, very, very happy about what he's doing. And there's a couple of other hobbies that he also that keep him down to earth. That we always kind of like cheers me up. Man, so happy to have you back on the show. How are you doing, man? How are you feeling?
I am good, Adrian, and thanks for having me again. It's been 2 years. We just talked about it. It's crazy how fast time flies.
It flies very, very fast, especially that, it feels like it was January, Trump was elected, and all of a sudden we teleported straight to year's end, which is like 90% complete or so. We have about, 33, 34 days left in the market, maybe 45, which is pretty crazy. And a lot has changed this year, and there's been I would compare it to some sort of like a earthquake. There was like a proper, like if someone just came up with everything that just put in the trash, everything, like all this seasonality flipped upside down. We had a session with Jeff yesterday about it, and then it's just like shake you up basically to just wake you up a little bit. It's been very difficult, man. But like how is 2025 to you so far?
I must say it's been pretty good. I am, as I run the RRG business, and I have a relationship with stockcharts.com.
Yeah.
So those two jobs, if you want to call it like that, are keeping me busy and off the streets. So the good news is that I can't do anything stupid because I'm busy. So that is the good thing. The flip side is that it keeps you very busy. Obviously on the stock chart side, I do all the data stuff, and there's a lot going on the data in the data landscape. And then there's RRG, which is the business that I run, and we license that to websites, software vendors, everybody. So my relationship with the market. I used to be a portfolio manager. I used to be an analyst. I still do that, but not as active. I'm much more involved in explaining the tool, helping people to embed it in their workflow. A lot of education, and the good news is when you educate, you learn yourself as well, and it also keeps me grounded because my problem, if you want, is that I too often think that people have the same knowledge as I have and
Hmm.
have the same mindset in a way of looking at things. And that is not always the case. And,
Yeah.
talking to all these people, keeps me grounded like, oh, right, I need to explain this more. I need to explain this better. Not everybody has the same experience with RRGs that I have. And
Hmm. Well, you're definitely a well-grounded person. For everybody who's new to your game, why don't you explain a little bit what keeps you grounded off the charts?
yeah, okay. So the funny thing is when you sent me the agenda or like what you want me to
Yeah,
talk about, you said do an introduction on Julius. And the funny thing is that sometimes I try to learn new things. And
yeah,
a couple of months ago I subscribed to one of the courses of Simon Sinek. You know that? You know that guy?
yeah.
I love that guy. I love the way he talks about presenting. And one of his lessons is literally you never introduce yourself in a presentation because
Ah,
everybody has signed up for your presentation. They've seen you on the agenda. They are here to listen to you. They probably
uh-huh.
Googled you. So why would you bother introducing yourself?
Yeah.
So, but when Adrian asks, okay,
Okay. That makes sense. That makes sense. But well, for everybody, I think Julius won't get mad because it's been a well-known fact already. Julius is a man with incredible history. So let me do the introduction for you then. Now, Julius is a man with incredible years of experience. He was starting off with nothing closely related to the financial markets, right? As he was in the as a back in the day in the military, was you were a jet pilot, if I remember
No, no,
correctly,
no,
right?
no. I did fly in jets in the back seat, but I was not a pilot. I actually
All right.
my wartime job was a local air defense control officer. So basically sitting behind a radar scope and assigning weapons to shoot jets out of the air.
Oh man, well, it seems now would be this year and next year would be a very fruitful job for that type of an
Yes.
occupation overall, right? Then thanks for helping out. The cases on the missiles, kind of like invading the Polish
Oh
space,
my
and
God.
the
Yeah.
Dutch people were coming up first. So I appreciate that. But all things concerned, I always consider you a very grounded, cheerful person. That even regardless what's happening on the market, you always have it all kind of like solved and cracked down. Also with the means of the RRG, which is an incredible framework on its own that I also use and incorporate in my analysis. I was just looking literally at the message that I sent you on WhatsApp on June 27th, right? I sent to you, to Jeff, to a couple of other folks, up there who have been running with me for, on Bitcoin for quite some time. And well, this is a quote. Hey, this is to inform that I'm starting my BTC exit, which is going to last over 6 to 9 months. I enter around SMA simple moving average 200, 20, 30, 40K, and so on, blah, blah, blah. And well, this was a little bit of a message, heartfelt message that I sent to people that I truly admired, that people that I know were closely somehow, one way or another, tied with crypto, to an extent that, we sold when I bought my grandma Bitcoins at 33,000 back in June 2021, at the massive dip that went off, 65K down to 30K. I only sold it exactly when I messaged that to you, right? So it was just a
Mhm.
couple of days in July. When July started, I think it was first week of July, we sold it for like 180, 100, 118, $119,000. So it was a pretty much, almost 4x gain. But it wasn't well, if I think about it in a retrospective, my grandma outperformed the vast majority of the market, right? Because crypto has been absolute carnage. There's a lot of discrepancies, a lot of difficulties, a lot of unpredictabilities that's been, that make the whole market kind of like upside down. Literally, the seasonality was off, the market clock pulse was off, the something that was supposed to be bullish was bearish, that was supposed to be bearish was bullish, that was completely moved. But why, with the RRG in mind as well, because we know that that you have a presentation, we can show it in a second. But if you were to say from the RRG perspective, from Julius the Campanero's perspective, like what has it looked like? Like, was it completely off there, something super strange to you, or you just took it as it is?
Well, I take everything as it is. So to me, I took that message, but I was impressed because you were so adamant about it and so detailed and so that, I mean, I think my you tell me, I think I responded to that message something like, this is a man with a plan, or looks like a man
Yeah,
with a plan, and
yeah, yeah,
I like a plan. I mean, the plan doesn't have to be 100% correct, but when you have a
yeah.
plan, you have guidance, and you have a thought process in place,
Yeah,
and that plan helps you to get where you want to go. And if things happen during the journey, you can adjust because you have the plan in your head, and you can just move a little bit to the left and move a
yeah.
little bit to the right, or have a backup plan. And that is something that I don't know for this audience, but a lot of people that I talk to just don't have a clue, don't have an idea. They just
Yeah.
jump in. They're punting left and right. One day they're trading CFDs, the other day they're trading crypto, then they're trading crypto futures. Oh, that didn't work. Now I'm going to trade stock options. I mean,
Mm.
that's not a plan. That's just basically using the market as a slot machine, and
Oh
we
yeah.
all know that that doesn't work. So
Yeah.
kudos to you. And I saw your retweet of that plan, and I thought, damn, that guy was good. He was right. He was on the mark.
Oh
Maybe
yeah.
not exactly, but like the big picture
Couple of days off. Yeah.
was
Couple
absolutely stunning. So
couple of
yeah,
days. Oh
pretty
man.
jealous.
I mean, I appreciate it. However, I bounced it back right off to you because you're the man with the plan. You always know what's happening. And speaking of knowing what's happening, you have prepared a presentation on RG. Would you mind if
Yeah,
we
let's
share it?
let's just move into that, because otherwise we'll be chatting back and forth.
That'll be cool.
So this is my bio. I mean, probably the most important thing is my move to a farm 6 years ago now. So instead of living in central Amsterdam with an office in central Amsterdam, I'm now all of a sudden find myself in the middle of the countryside, about an hour south of Amsterdam, on an old horse boarding stable with 8 horses, 3 dogs, 2 cats, and one kid who just turned 18. You just had your daughter, Adrian. My daughter just turned 18. You should be prepared when they're 18 and they get their driver's license. You need to sign up to use your own car. I mean, that's insane.
What?
Yeah,
Oh
they
yeah,
want to
yeah,
use it. They want to use your
yeah, yeah, yeah,
car.
yeah, yeah, yeah. Like a subscription. Yeah, makes sense.
Yeah.
Like, yeah,
And all of a sudden that happens. We just talked about how fast
yeah.
time goes. That's tomorrow for you, dude. That's
Mm,
tomorrow for you.
mm,
So this is an RRG. We're going to talk much more about this in the end, but this is for people who have never seen it. This is how an RRG looks.
yeah,
And what this does, and I always want to start with a definition, because people sometimes take it wrongly. So an RRG, in our relative rotation graphs, shows you trends in relative strength or trends in performance. And it does that for multiple securities in a universe against the common benchmark, but also against each other. Be careful, they do not show relative performance as such. And there is a very big difference between a trend in performance and the performance as such. And I was reminded of that this morning. I got a message from someone who watched a video in which I said that the consumer discretionary sector in the US was in the lagging quadrant, and it was underperforming and it was weak. And he sends me a message. This video was uploaded 4 days ago, and the consumer discretionary sector is already powering up. And well, what is he talking about? I looked at the RRG. It's solidly inside lagging on the weekly chart. It's still in lagging on the daily chart. So I had to respond to it like, you're mixing up time frame. You're mixing up like performance, day-to-day performance with a trend in performance. Trends are never a straight line. So that's, I think, the most important takeaway from this definition. We're looking at trends. We're not looking at like noise and day-to-day stuff.
Yeah.
When we look at an RRG, there's two metrics. So it's a horizontal scale, you got the JDK-RS ratio, vertical scale, JDK-RS momentum. And what happens is that when you calculate those values for a group of securities, everything that is in a relative uptrend, and that uptrend is still being pushed higher by strong momentum, ends up in the top right quadrant. We call that the leading quadrant. Now, we all know that momentum or rate of change is a leading indicator. So the first thing that will happen is that your rate of change of that trend will start to level off. And when that happens, that security or that sector or that crypto or whatever you're looking at is dropping into the weakening quadrant. Still an uptrend, but losing strength. That loss of strength continues, then it will eventually be pushed into the lagging quadrant. What you'll find there are sectors or securities that are in a relative downtrend, and that downtrend is still being pushed lower by negative momentum, by weak momentum. And then just like on the upside, the first thing that will start to improve is momentum, and that will start to pick up. It'll push that security into the top left-hand quadrant. We call that the improving quadrant, where it's still in a relative downtrend, but it's improving. And if that improvement continues, if that strength continues, you will get that rotational picture. And this is something when I had this first in a very, very early stage, and I saw that, I saw that rotational picture playing out. I thought it was like, okay, so this is the first time that I could actually see market rotation, because everybody's always talking about market rotation, or in this case, sector rotation. But they were always showing me like these sine waves that go back and forth around a mean. And now you see the actual rotation, and it's clockwise and it's around a mean. So what does this do? What does this help me with? Because investing, as we all know, is basically just the business of making choices. There are so many opportunities, so many instruments, so many markets. So where are you going to invest? Which choices are you going to make? And that's, I think, the biggest problem for any trader or any investor. And that's where the way I think about markets is really top down, and I call that the investor's decision tree. So you got a tree. So basically we start with a portfolio, basically a bag of money. And then this is a very simplified approach. Like, are we going to invest in bonds or are we going to invest in equities? So basically you need to make a comparison between bonds and equities. They could both be going up. Prices for bonds could go up, price for equities could go up, but which one is going up fastest? Or if they both go down, which one is going down less fast than the other? That's the whole relative thing. And you can build that up, let's say, on regional level, US, Europe, Asia. And then you've got equities in US, equities in Europe, equities in Asia, and the same for bonds. So the number of choices, the number of decisions that you need to take is increasing. And it doesn't take a genius to figure out that if you build this pyramid further down, that the number of choices, the number of possibilities is ballooning. It's insane how many options you will get. And that is where relative strength, and that is comparative relative strength, is coming in. So not the RSI that everybody uses on their charts. This is comparative relative strength, charting a sector against the S&P 500, a stock versus its sector index, a crypto versus Bitcoin, a crypto versus the US dollar, currencies versus another currency, anything basically you can put on an RRG. But what it does, it shows you the comparison inside that universe based on comparative relative strength. And the tool helps you to basically answer the question, what is good and what is bad? What is improving or what is weakening? And that is a good thing, because it helps you to create a picture of the landscape. And I like to call that RRG shows you the big picture in one picture. And that is a problem that a lot of people face. If you're focusing on one or two charts, it's very easy to lose what's going on in the big picture around you. So even if you are, for whatever reason, just trading equity futures, I don't know, you may want to know what's going on in the world around the market that you're trading. If you're only trading technology stocks, you may want to know what's going on in the sector versus the S&P 500 or versus a bigger universe. And that is what RIG helps you do. It's showing you the big picture in one picture. And let's quickly go to some initial rules of thumb that I've learned since developing RIG over the years. As I said, the top right quadrant where relative trend is up, momentum is up, that's what you want to hold in your portfolio. That's basically, those are your holdings because they're outperforming the market and that outperformance is being pushed higher. When you drop into the weakening quadrant, you are either looking for sells or what I call rebuys, because yes, the rotation is always clockwise, but it doesn't necessarily always rotate through all four quadrants sequentially. What you will see in a very strong uptrend is that we move from leading into weakening and then back up to leading. And if you imagine that on a chart, a trend is almost never a straight line up. It's a series of higher highs and higher lows. When you see on an RRG leading, weakening, leading, you will see the second or the third or the fourth up lag in an already existing trend. When it moves from weakening to lagging or from improving to leading, that's when the trend changes. So when you're in the lagging quadrant, that's basically the stuff that you want to avoid. You don't want to be there. That's going down. It's underperforming. It's in a relative downtrend, and that downtrend is being pushed down further. And then in the improving quadrant, you are looking for buying opportunities or resells, opposite of the weakening quadrant. So when you want to use RIG as a shopping list or trading idea list, basically I am looking for buying opportunities inside the improving quadrant that are close to crossing over. If they are very far away at very low RS ratio readings and they're pushing into the improving quadrant, I am looking for that tail, we will show that later, to roll over and looking for a resell or a new shorting opportunity. And the positive side, the right hand side, is obviously the reverse of that approach. Now, the initial rules of thumb, when I first developed RRG, I thought like, oh, this is cool, this is easy, man. From improving to leading, that is a buy signal. From weakening to lagging, that is a sell signal. And what I found out is that you're really late to the game. It's a very conservative approach because by the time that happens, a lot has happened on the price chart and a lot has happened on the relative chart already. And when I figured that out, I thought, you know what? I'm going to do it the other way around. We're going to go buying when we move from lagging to improving, and we go selling when we move from leading to weakening. And that is a very aggressive way of doing things. Because as I just explained, sometimes these rotations, they are leading, weakening, leading, or improving, lagging, improving. And when you sell because of that, you may be missing the second or the third lag of that move, because that happens usually in very strong trends. So the truth probably somewhere in the middle, and I don't have a hard rule. Everybody asks me what are the trading rules for an RRG. I counter that question. What are your trading rules for a candlestick chart? What are your trading rules for a bar chart? I mean, it's the way people use it. It's a tool that helps people visualize markets. And I've come across people who use RRG in ways I have never thought of when I developed them back in the early 2000s. So having that said, this is the kind of very rapid groundwork foundation of an RRG and what I've learned over the years to how to use it. You want to jump on that?
Well, I mean, it's something that I always kind of admire myself, because what it does is it simplifies a lot of the thought process. And there was a comment from a person about that being an integral part of the CMT study, which is where I got to meet your works. I mean, that's to me, it's still up until this day, it's still a blessing to be able to speak with the author directly. So that's pretty cool. But for what is what, what I always admired about RRG is how much it simplifies and puts everything, just like you said, in one screen. So instead of having like 5,000 screens all together, and then having not only the absolute charts, but then the relative performance charts, right, and the ratios and stuff, you have it all put together, and kind of like you see how the rotation truly just goes in cycles, goes in those circular movements. So in the end, that is something that I personally love, and that is something that I use as well. Of course, it doesn't have the timing factor to it, so to speak. So I don't naturally use it for timing, for like microscopic precision in terms of, oh, I want to buy this stock and this on that particular day. But it gives me it gives me the destinations, gives me the directions and the narratives. Yeah, does that make sense?
Absolutely, and I always tell people, don't use RRG in isolation. Don't use it as a standalone tool. It's part of the toolkit. This tool helps you to get an overview. And in some of my presentations, I have a sheet. I have a military background. And in the military, something that's super important is called situational awareness. You are with your unit or with your person or whatever, somewhere in they call it the theater.
Yep.
And you don't want to end up in a situation where it's called blue on blue, when you shoot your own troops or you drop a bomb on your own people. So situational awareness, especially for an Air Force man and a pilot, is super important, because you need to know who's what and who's where. And various arms of the military have means for that. In the Air Force, we have these AWACS planes, the early airborne warning and control system. These Boeings with the huge dome on top. That's a huge radar screen, and they fly at super high altitude. But that radar can paint a picture of what's happening in the airspace below them. They see enemies, they see their own troops, and they can guide their own troops to where they need to be. If you're in the Army, they always have what's called an overwatch unit. They will find a position, an elevated position, overseeing the theater that they're working in, and they are in touch with their troops, and they can say, what's your 6, what's your 12 o'clock, what's your 11 o'clock, there's enemies. On your 3 o'clock, that's friendly. And that's what RRG does for you. It gives you that overview picture, but in the end of the day, we need to trade whatever the securities that we want to trade. And RRG is not going to tell you right now is the time to trade. It will tell you like, hey, something's happening here. And then you bring up a normal chart, a regular chart, whatever your workflow is, whether you work candles, point of figure, bar charts, I don't know, whatever. And also the time frame. Some people are longer term investors. They use weekly charts for longer term trends. Somebody is a day trader. They may want to use, 30-minute charts, 5-minute charts. So it's very, very flexible. But the RRG in all time frames will help you to paint that picture and create situational awareness of the securities that you want to trade. And that is where the real value comes from.
Yeah, which in the end leads to more accuracy, right? And more accuracy.
Yeah, absolutely. Also, it prevents you from doing stupid things.
Oh yeah. Well, most of the time it's more than enough, right?
Oh yeah, if you prevent the stupid stuff, then you're already ahead of the game.
Oh absolutely. Yeah, man. Same. That's my struggle as I started. As I picked up playing golf. Then decreasing the handicap basically without going crazy is about not really how many good shots you have, but about decreasing the number of bad shots that you have. Right. This is what.
Yeah, and in a way, it's the same, right? You're battling yourself.
Oh yeah.
Trading is a battle against yourself as well.
Oh yeah. Yeah. And and there are many good memes on that topic. But for what is what, I mean, we're looking at a like I said, the whole portfolio, kind of like a construction framework. Would you like to run us through?
Yeah. So this is what I started developing over the last couple of months, and you may see the similarities to the pyramid. So starting at an asset class level, I like to keep things very simple and structured. So my asset classes, and this is built for the US market, but you can fill that basically in for any market in the world. So for me, asset classes are government bonds, corporate bonds, high yield bonds, stocks, commodities, crypto, and cash. And the ticker symbols there are ETFs that track those asset classes. And my first level of analysis is just to look at what is happening in these asset classes. And for that, we bring up an RRG. Then government bonds, you can drill down into the various maturities of the government bond curve, the yield curve, government yield curve. And you got various maturities. And then in the stock market, you can bring it down to sectors, and you can have an RRG that looks at the sectors. In the commodity space, you have a number of commodity groups, and you can look at an RRG that covers a bunch of commodity groups. And then in crypto, obviously there are, I don't know, way too many. I took I think it's top 16 of market cap.
Yep.
There's many ways you can slice and dice. It's just to give you an idea on how to do that. And then we start the work. And this is the RRG that I use for asset class rotation. And let me bring up a live version of this chart, because now you can actually see what's happening. If you want to go back in time, let's see what happened over the year. And this is the start of the year. So the last data point here is January 3, 2026. And you can see that Bitcoin was already like so detached from this universe, way out to the right. But you also see that stocks, SPY, was on the right-hand side, and the fixed income stuff was on the left-hand side. And then over time, that situation changed. By the way, the benchmark that I'm using here is VBINX. Benchmarks are super important for RRGs. And VBINX is a Vanguard fund that holds 60% in stocks and 40% in bonds. And those bonds are diversified over government, high yield, and corporate bonds. So that is the benchmark. So the commodity tails, the blue ones that you see here, are not in the benchmark. Bitcoin is not in the benchmark. It's important to note. And then you can see how that rotation takes place. And then here, all of a sudden, you see in January, February, you see that commodities are taken over. You see that the bonds are improving a little bit and stocks are deteriorating a little bit. Let me I'm going to tick off Bitcoin, because you know it was insane what happened there. And then make this bigger so we can see those rotations bigger. And then you see how stocks moved into lagging, and we're now in April. We know April was, kind of the end of the bull market for stocks, are bottoming out, and you can see that happening here on the RRG when it starts to turn around in May, just after that low in April. And you can see how the fixed income stuff is rotating the other way, and then stocks pick up. And you can see, I mean, people who've got the chart. So this is this chart of SPY, and you can see that the move is already underway for a couple of weeks before SPY actually hits the leading quadrant again. By the way, this is a weekly chart. When you do it on a daily, it'll be much sooner, but I like the longer term trends. And then you see how SPY moves. It loses a bit of strength here, and we are now in September. And move into weakening, and we are now still there. So from basically September, October, stocks started to rotate, lose at least relative momentum. And now, as you can see over the last 5 weeks, we're also losing relative strength. By the way, if I make this tail longer, you can see those rotations a little better, how they take place and how they're actually rotating in a clockwise fashion. So where we are right now, I think that stocks are still in a very long uptrend, but they're losing relative strength. So I'm a little bit more cautious for the near term. And these trends here are all pretty good. So especially commodities, so DJP and to a lesser extent GSG are doing really well. And you can see the improvement in the fixed income space. And here is cash. Here is the dollar index, which also surprisingly is picking up recently. So that is the first level of analysis on the RRG. And when we then go back to our framework, we can put some colors on it. I like to work with colors. So you can see how stocks, they used to be green all the time. I've just turned them to orange to weakenings. By the way, these colors are not necessarily 100% corresponding with the colors on the RRG. This is my kind of rating system. So plus plus is outperform, minus minus is underperform, and equal plus means it's neutral with a positive vibe, a positive outlook. Our equal minus is neutral with a negative outlook. That's the way I look at it. So stocks right now, they're still neutral, but at least next couple of weeks, maybe months, I have a negative or neutral outlook for stocks, and that has turned around. These were all red, and they have turned blue 1 week ago. Commodities are now very, very green. Crypto, Bitcoin, we lost it out, but it's now far to the left. It moved really into the lagging quadrant. And as I said, the dollar index, or the US dollar in general against a basket of currencies, is improving very rapidly. So that is the first layer. Any thoughts before we move on?
Well, I mean, and I'm just looking at Bitcoin. It's 11.36% down year to date. So it definitely, just matches what you mentioned. I also, like with the colors, it makes sense. Yeah, if you can bring back Bitcoin for a moment, right, for everybody to see.
Yeah,
so what I know for RRG, how it works is the longer the tail you have, the more aggressive and the stronger the trend. Right,
100%. Yeah, the tail length equals power.
Yeah, so the more powerful the trend to the downside, if you will.
Absolutely.
And more powerful trends have this tendency that they rather continue, right?
Absolutely.
Before they turn back randomly.
Yeah.
If there is, somewhere closer to the circle, to the benchmark, right? So the VBNX, this index from Vanguard. Then the less of the velocity, the less of a both momentum and the relative strength as well. On that end, and it's easier to kind of like flip and flop and change. It's like more indecision. But when you see an outperform, or I should say outlier like that, a very strong, significant underperformer, well, it just makes me, in retrospective, it just makes me happy that I cashed out, out of Bitcoin, quite major part.
Well, I mean, let's roll it back, because you tweeted that around June, I think, right?
Yeah, it was June 27.
Yeah, so so June 27. That's right here. Now let's see what happens. So right after that, it just had one little more blip to the right, and then it starts to lose momentum.
Yep.
This is also interesting because I think Bitcoin actually, in price, went up a little bit more from June, July. I don't have it off the top of my head, but I think it moved up a little bit more. But you can see that the relative had already started to deteriorate. So it was a real early warning there. And you can also see, like, compare the tail length here with the tail length that you will see moving, when it
just
decreases.
extends,
So look at how that extends. And remind you, this is a 7-week tail. So all tails are 7 weeks. Compare 7 weeks of movement for Bitcoin with 7 weeks of movement for SPY or high yield. That shows you the difference and the difference in power of the move. And this is a falling knife right now. Someone who comes in and says, I'm going to Bitcoin right now. I'm going to buy Bitcoin right now because it's down whatever level it is. You're catching a falling knife. That is a slot machine.
I mean, on the short term side, many people. I feel generally, there is like per the general consensus is like we tend to confuse as a humankind. We don't have the sense of time per se because it's intangible, right? It's only us putting that in some sort of like frameworks. But in the short-term context, like it can be very mind-bending and boggling for many people that Bitcoin can be bullish, bearish, and neutral all at the same time, depending on the time frame, right?
Oh yeah.
We would expect like absolute answers for like that's gonna work forever, like a holy grail answer, like yes, Bitcoin is bearish. Like it rarely ever happens that is bearish all across all time frames possible, right? From like 5 months to from 1 year to like 1 second, because it all the lower we go, the time frame scope, the more random it gets. But in the end, there's like a lot of bottoming signals in terms of the short-term stuff, right?
So I just loaded up the daily version. The same chart. So now you see
it still
Bitcoin
doesn't say anything.
Oh,
right?
it's still very, very bearish.
Oh yeah.
Super bearish.
And
so
see, that's the whole point. Like, there's this absolute strength to the downside, which is what makes me think, right, that I cashed out pretty much on top of the bull market. And 37% absolute correction, nominal correction, is way too deep for me to classify that as any short-term meaningless kind of like a chop.
this
To
is
me,
very
it's a
meaningful.
structural change. And many people would still, argue, okay, that we're going to go higher. Well, I have no idea what market is going to do, but I know for sure that not for sure, simply because that's what the data is saying. So that's why I have that, certainty, is that the absolute sentiment lows, typically on the contrarian approach, would tell you that, okay, similar to RRG, would give you a little bit of picture of a contrarian attitude, right? The crowd is absolutely sold off. That the oversold conditions on the momentum RSI and so on. So short-term perspective, most likely, and I spoke with Jeff, the Santa Claus rally and everything, it may give us a little bit of a refresher. But if anything, I subscribe to the thought of Peter Brandt, who said that it's most likely going to be a dead cat bounce, which means that it's just going to be like a weak bounce, just driven off the volatility. Is likely going to give us like a 10-20% maybe just bounce into the 110, 100, maybe 12,000 if we're lucky. But other than this, like, it still remains in what Julius is just showing on the both daily and then the weekly 7-week period, where you see absolute acceleration and very, very big determined change of the structural change, right? So it's not the short-term thing. Like, the whole situation on Bitcoin completely flipped 180 degree. Could you agree?
And yeah, absolutely. And what I just told about, like, the very strong rotations. So in the case of Bitcoin, a very negative relative trend often shows something goes lagging, improving, back to lagging. Now look at Bitcoin here. So I scrolled it back to October 30.
Yeah.
And then you see it goes into improving, and then it almost hooks to the left.
Oh yeah.
And people say, so where is the clockwise rotation? And what happens here is that, let me, shit, I'm doing something wrong here. That's not what I wanted. So where is the clockwise rotation? So what actually happened here is that rotation went so fast that it actually pivoted around its own axis here. And now I'm going to try something which I haven't prepared.
Took a drift.
Yeah, let's say if I can get the 60 minutes. So this is November 4. Let me see if I can get the 60 minute for this chart. No. Oh, it's taking. No, that doesn't work. VBINX does not have intraday data.
Yeah.
No, but what you would see is that it is actually going in, and on the 60-minute chart you will see a rotation taking place.
Yeah.
And then it has rolled further down, and it's at a negative heading. A negative heading is where you move at a negative 45 degrees, which is actually 225 in this case, when you look at it on a compass. So Bitcoin, I don't see anything good in the next. Well, as you said, maybe a jump or a little, but no news. There's a lot of damage being done right now.
Oh yeah.
Damage on the chart needs to be repaired, and usually charts repair their damage over time. It takes time to repair that damage.
Oh yeah. So we know the drill for Bitcoin. So even though there might be, like, sooner or later, listen, for everybody who's watching and listening, right? Sooner or later, we're gonna see whatever dump this is likely gonna go up in some time, especially if it's highly desired and sought after asset. So regardless if it's stocks, Bitcoin, bonds, and so on, as long as there is this flow of demand, in the end, it's gonna stabilize, go into through equilibrium and just turn back for a moment. But what we are seeing, and again, it's not. It's plain in the side. It's right there. It doesn't even just refer much of the opinion, because it's factual that Bitcoin underperforms both on the relative strength, so how it performs against the benchmark, and both on the momentum side, which both kind of like are very bad. So this momentum accelerates to the downside, if anything, right?
Oh yeah.
Also of this relative strength.
Yeah.
So it's just not really a good pick for now. But how about stocks? Talk to me about stocks, because I sent you a message. Kind of like in the preparation for the show, and I sent you a couple of charts about the Hindenburg comment, and there's been for the context, all right? So the context for everybody who's watching and listening, again, we had two Hindenburg Common, which maybe considered to some extent a meme or some over repeated scheme. However, in reality, what it does, it informs you about the underlying change and break of the break of the market structure, right, underneath. And it tells you that there's disruption of money flow, disruption of breadth. So it seems to me that what Bitcoin and altcoins have in common is similarly parallel, kind of like one-to-one to what S&P Magnificent Seven and the rest of the S&P has. So could you agree with that? What's the RG telling you about the S&P and the current market on this?
Yeah, so let me, just for the sake of speed of the presentation, so this is the bond stuff. Let's not talk too much about it. We're looking at the various maturities on the yield curve. That gives me an opinion on what's happening in the bond market. I've translated that into right now a flattening pattern. You can see the shorter end of the curve picking up, the longer end of the curve moving down, and that is a flattening of the yield curve. So that's the position on the bond market. Now the next thing would be stocks. And let me bring up, I'm going to use the chart of our good friends at Optima for this. So here we have an RRG for the sectors. And what I've done here is I've added, we use bubbles here. And this is a third dimension. And the bubble here represents the market capitalization of the sector. Because the center of the chart here is the S&P 500. So all these sectors together make up the S&P 500. I call this a closed universe. Everything on the chart is in the S&P 500. Now, mathematically, they should be spread out evenly around that benchmark. But we can easily see that that is not the case. And the reason why that is not the case is because not every sector has the same market capitalization. We all know that technology is massive, massive market capitalization. And you can see that here financials is a big one, but also healthcare is a big one. And the other ones are much smaller. Real estate, so they're way smaller. So here, this is Staples, 2.17% in market cap. That is causing that shift away, because when you would draw the vectors, the weighted vectors from the last point to the center of the chart, they would actually mathematically even out at zero. So that's a zero-sum game. So again, so what happened in the stock market, where you see when we scroll back to, let's say, the start of the year, you can see that at the end of last year, tech wasn't all that good. We had a lot of strength in discretionary and financials, communication services, utilities, real estate were rotating out of favor. Here's healthcare, staples. Here is technology, not doing really well. And then we start to progress through the year. And this is a good one. See how this is, again, tail length. You just brought up tail length. Look at short tail for tech here and the long tails for real estate, healthcare, and discretionary.
So confirms what I said pretty much.
Absolutely. Yeah. And then you see that all of a sudden that starts to come alive. Tech starts to come alive, and that's happening 24th of January and pushes into the leading quadrant. It has a little bit of a rollback. That's the weakness that we saw in the beginning of the year. And then you can see all the others. You see the strength of tech. So this is only tech and discretionary are moving what we call a negative heading. All the others have a positive heading. That brings the S&P down, by the way, because these tech and discretionary are together over 45% of the market. So that's dragging the S&P down. And then here we start to move, and all of a sudden, here it starts to pick up. We're now early May, and we start to move further. And now tech moves into leading May, June, and pushes into it and remains there all the time, and then starts to roll over and move into the weakening quadrant where it still is. You see one of those like real pivot slides moving on, and you can see the improvement for healthcare, utilities. So right now, and this is interesting because this all started to happen when the S&P was still holding up. And one of the things that I look for in the stock market or in the S&P in general is when the market is really bullish, you will see offensive sectors inside the leading quadrant, or at least at a positive heading. And offense is technology, communication services, discretionary, industrials, materials. When the market is still holding up well and trending up, and you see defensive sectors like utilities and healthcare and consumer staples starting to pick up the pace, for me, that's a warning signal. And that's starting right here. You can see how healthcare and utilities and staples to a lesser degree, but still starting to pick up positive momentum, when they are starting to improve, while the market is still holding up at decent levels. Combine that with, we all talked about narrow breadth, right? Well, there's very narrow breadth. Only Max 7 stocks are making the market. There's only 7 stocks that are driving the market higher. That is this story here. That is the technology sector. But the defense is starting to play up, and that's getting broader. And that is what you see happening. And then when that defense really takes over, and this is current, we see how technology starts to weaken, and those defensive sectors are improving. And I think that's what's going on right now, and that's what's making me so cautious with the development of the stock market going into year end and January. And you already brought up Jeff with Jeff Hirsch with the seasonality. I love seasonality. I love Jeff's stuff. And we are getting into the seasonal strong period of the year leading into January. But I saw one of Jeff's comments that I think there were a few occasions where the last part of the year wasn't very good historically, and that usually didn't bode very well for the start of the next year.
The January trifecta,
Exactly, and I would not be surprised if we are going to see another one of those occasions for the stock market.
Yeah, I agree. And well, you kind of like answered the question implicitly that I wanted to ask you, because I'm keeping in mind, the time constraints that we have.
Yes.
There's a couple of minutes left. Although, I wanted to get your brain on what RRG says, and what would you say is, based on the current, like the developments, especially from like the overall portfolio construction, right? Heading into 2026, with this caution in mind, with those changes underneath, with the narrow breadth and so on, what would you say is, like, what's your personal strategy? What's your focus? What do you have on your mind for the next year? How you're preparing for this?
So I'm a very slow investor. I have very limited exposure to stocks. I have a lot of cash. If you're in stocks, I would position myself in especially utilities and healthcare. I would definitely have some commodity in my portfolio, and there are always interesting coins to find. So, but the general message is very cautious with risk on assets, very well protected. I think that would be my message for year-end, start of the new year.
So start of the new year, all right. But how about the entirety of 2026? Like, do you see any particular things for like same time next year?
Same time this year, next year?
Same. So what I'm trying to see, right, from the perspective of someone who's new, someone who's just discovering your work, is people are concerned, like especially in crypto, like just like you said, it doesn't seem like it seems like there's no end to it.
Yeah, no, I get it.
So
it rotates. So just sit it out, wait, don't jump in, wait until, I would use the weekly RRG when you see stocks and Bitcoin starting to rotate back up. That'll be your sign to slowly start looking at more detailed chart, looking at individual charts, maybe pick a more aggressive sector and start to move back into the market. Because in the end of the day, all markets rotate. They go from downtrends to uptrends. We're currently seeming to build up a downtrend. That will end too. We just don't know when. But if I look at the long-term chart of stocks, that is still an uptrend. And if I look at the really long-term chart of Bitcoin, that's also still an uptrend. We're just going through a massive decline right now, at least in Bitcoin. I'm not sure whether that's going to be that massive in stocks, but I'm cautious and I don't want to catch a falling knife. So I'm very limited now and very defensive. And I'm just waiting until the charts and the markets are telling me that it's ready to get back in or ready to get prepared to get back in.
So how would you play it out, knowing of a lot of weakness that is underlying right there, and a lot of warnings, a lot of bold, kind of like just warning messages that the market is sending? Do you consider like this, that the Alvaro's classic like Vanguard 60-40 portfolio is gonna do somewhat okay, or is it gonna be like really bad both for stocks and bonds?
I think it's going to be bad for both. So if you're a retail investor and you don't have to invest, institutional players cannot afford to move to stay away out of the market. I would hold a large portion in cash and be very careful and be very selective. Maybe just find a couple of interesting charts to punta to play with. But from an asset allocation perspective, I'd be very, very cautious.
Yeah, and beside one of the solutions is making sure that if you go on Twitter.com on X.com, that you open up the RRG research, because that's exactly what you're gonna find this whole gold mine of information. So RRG research is exactly Julius's Twitter handle, X handle, if you will. So make sure while you're there to hit the follow button, set the notifications on. That's what I do. That's what I had done, and I have the notifications on. So every time I see a new post from Julius, I leave everything. I drop my car, park the car on the highway, and just run to check on it. But jokes aside, I mean, kindly recommend. I cannot recommend it enough. And one thing that I definitely, then it's private. One thing that I want to know from you, Julius, before we wrap is how was this year's CMT event in Dubai?
Oh, it was great. Yeah, I was so sorry that I didn't see you, but it was a fantastic event. It was even better than 24. It was way bigger.
It was better.
It was way better, and it was very interesting. It was 2 days now, 2 solid days. Well, actually, it was an entire week. They had all events, so it was good fun. Lots of interesting people. Too bad that you couldn't make it, but I told Tyler to actually coordinate with whatever crypto event or other CFA event or whatever is in the region, so not to be in each other's way.
Oh yeah, I mean, it happens in the logistics side, but I'm so happy to see it. I'm so happy to hear about it. I know that the CMT, I mean, huge shout out for everybody who's contributing to the CMT, because Julius is, Jeffrey is, myself, very, very microscopic level, but I'm somewhere present there, and I'm trying to set the right guide, railways, if you will, in my regions. Wherever I go, I always speak about CMT. I'm very proud of that charter, and also try to shine the right example for everybody to follow, send the elevator down, especially in crypto, because there are a lot of bad actors, a lot of scammers, a lot of misinterpretation, a lot of misinformation, people running off, basically some scammy YouTubers who are gonna just sell you some shit without any sort of like disclosures. And in the end, that's the picture of crypto that people are getting, right? So it's and it's not true, because despite all the weaknesses, despite all this performance, that's been questionable to a lot of traders, especially on the crypto side. There's been a lot of adoption, kind of like movement this year, paving in the whole new bunch of a marketplace, right? We have pretty much Larry Fink, talking about crypto as the tokenization of assets, using crypto as the next generation of assets at all. He wants to tokenize his funds, to tokenize securities. That's what's happening. In the end, of course, hundreds of millions of billions of dollars as well, tens of billions of dollars right now. 111 last time I checked. It was the total AUM for crypto, for Bitcoin ETFs in total. So it's quite a big portion of money, but at the same time, it's just the very beginning. So the conclusion is, out of this entire session I've got with Julius, that even though we have a little bit of a cautious tone heading into the year's end in 2026, potentially this rotation, like anything, it goes past, right? It's gonna change. It's gonna bounce back right in some time. We don't know exactly when. If someone knows exactly when the corrections are going to happen, just call me.
Give me a call.
Exactly. No, right after you. We both, you and then me. Then call me later.
Do a conference call.
Yeah, exactly. This. And funny thing is, one thing that I wanted to show you, Julius, just I need to bring up this post, and then give me on that a second.
Of course.
There was a guy. I need to find it real quick. It's going to be a little bit of a challenge, but there was this guy that said, like, in 2023, there was this whole kind of like I don't know if it was a Reddit or a Fortune or something. It was some sort of like a forum where some folks were sharing an opinion about crypto and the state of crypto, and there was a guy in 2023 making a post, making a prediction. Oh, I see it right in front of me. Let me just somehow bring it on. Just need to figure out a way to do it because I'm using two different laptops. How do I do it? I'll send it. Do you have your Twitter on? Kind of like, do you have your access to your Twitter?
Yes, I do.
So I'll send you a link on Twitter. So if you can open it up from Twitter, I'll just show you a screen. Okay, let's do it this way.
Sure.
And in the meantime, for while Julius is working on it, I want to encourage everybody, because if you haven't followed Julius, then please go and fix that mistake. That's a quite an expensive mistake not to be following Julius. Cannot recommend it enough. And let me just highlight it. All right, so this is a post. This is a screenshot that was done in 2023. See at the top center date, it's 12 December 2023, and this said the pattern would print the cycle's all-time high on the 6th of October 2020-25. Guess when was the cycle top?
You're gonna say October 6th?
That was exactly October 6th. So there are some different strange forces that inspired me to continue digging deeper. That's something that I encourage everybody as well, to dig deeper, to always keep in mind your personal growth, personal development. Go open up the books, go learn about the ROG. That's an incredible whole set of toolkit and frameworks that you can utilize. For everybody, as we wrap, for everybody, if you haven't claimed your free access to our Discord, make sure you fix that as well, because every Congress participant, everybody who's watching, is eligible to claim free VIP membership. It's not going to cost you anything, except that it's limited, right? And everybody who's really choosing to stay a little bit longer, there's going to be a whole Black Friday sale for everybody. There's going to be a link in the description as well if you're watching that on YouTube or so. But any golden line, any closure from you, Julius, any kind of like a golden thought that we love to leave our listeners with?
I love doing this stuff. I love talking with you, and we always have too little time because you rushed me and said you need to be under an hour, and now all of a sudden you push us over an hour, and I was like, there we go.
2 minutes,
no,
yeah.
just kidding. I mean, I'd love to. I love this. Anytime you want to talk anything ROG or anything else, I'm there for you. And if anyone in the audience wants to reach out, my details are on the screen. I usually am pretty adamant about replying to all my messages. Depends a little bit what's in there, but I'm a pretty decent guy answering my stuff. I don't want to ghost anyone. So
correct.
There you go.
Plus, all the Dutch folks are really, really nice, and we love the Polish.
We've got a few that are not so nice. It's just like everybody else.
Well, I mean, I cannot definitely say that about you, Julius. And for everybody who's not aware, just a final anecdote. The first encounter I had with Julius, pretty much like vast majority of the Dutch people that I know, is like I always have to look up like 5 meters above my head, basically, to just match their eyesight. This is incredible how tall you guys are. This is crazy advantage.
Yeah, just tell people, that is true. The one thing I want to share is the two of my partners, StockCharts.com and Optima, have their sale right now. So I think the links were up on the screen already. So if you grab that, you can get a massive discount on StockChart and a very good deal on Optima. Depends a little bit on your needs and your data needs and how quant you want to be. Either of those, they all work. They both have crypto data. So take advantage of it if you like.
Kindly recommended Optima.com/RRG special and StockCharts.com Cyber Week. 100% recommended. That's something that I use privately. I can not recommend it enough. 100%. Julius, what an absolute pleasure every time I see you. We have a good chat. There's a friendly aspect to it as well. I have lots of admiration and an appreciation for what you do, for who you are. Just keep on being you. Yeah.
Goes both ways, my friend. I'll see you soon.
Appreciate it. Thank you so much. And for everybody, this is the last show we have today for our day 3 of Trading Congress. Make sure you stay tuned. Hit our Discord. Just check the links in the description. Also check out the Optima website that Julius just showed in a second ago. And I'll see you tomorrow. God bless you all.